If I'm a buyer in today's market, what can I expect in terms of like rates for a conventional loan?
If there's a red flag, that's a showstopper where that could prevent that deal from going forward unless another solution is presented.
What do we think happens the next 6 months of 2025 and into 2026?
When you go to these jumbo loans, there's no PMI. So what the investor does to compensate for the risk that they're taking is they will give a higher interest rate.
Does it mean when they cut rate that the mortgage rates are going to go down? Let's talk foreign nationals.
Okay.
I've dealt with a lot of foreign nationals. I know you deal with a lot of foreign nationals.
Yeah.
Whether from Europe, South America. Truthfully, a lot of the foreign nationals I've dealt with are cash buyers. We see that a lot.
Absolutely.
But not everyone.
Yeah.
I actually just helped a foreign national get a loan and close a deal. Mm-hmm. What are the minor differences for foreign nationals?
So with foreign nationals, it's a minimum down payment of 30%. So,
across the board. House, condo, regardless.
Yeah, 30% is typically required. And they may or may not have a U.S. tax identification number.
Let's say they don't.
They don't? Okay, then that's not a problem. And then they may or may not have a credit history, right? That's reported. So if they don't, that's okay. So we just look for the capacity for them to pay back the loan by way of DSCR, because that's how we're going to know if they can cover is the rent. Most of the times we treat foreign nationals.
Wait, tell me what DSCR is. I know, but tell.
Yeah, but DSCR is debt service coverage ratio.
Right.
So we want to know that whatever the rental income that the property can fetch will be the same or higher than what the new monthly payment. So it can basically cover, or basically cash flow, right? So we just want to know that, and if that's the case with them 30%, which will get them pretty close, obviously to that. Then that's it, and we just will require that the funds are in a U.S. account prior to closing, so that we have that. But I mean, it's pretty much cut and dry in terms of
it's pretty
foreign
easy.
national.
And what about rates for foreign nationals?
Those are going to be higher because again, the risk is the fact that they're not here.
There's no credit history.
Yeah, here in the U.S. Any of that. There's a large down payment, but those rate terms, you'll typically see that being 100 basis points or so higher.
So if we're at today's rate, 6.8, it might be 7.8.
Yeah, around that. Mm-hmm.
Let's get into the next ones, which are, if I can't do conventional loan, if I can't do FHA, conventional, jumbo, whatever, whether I'm an investor or whether I'm a primary buyer, what are my options for non-conventional products? Like you mentioned DSCR, I know that's going to be one. Yeah. What else is out there? Let's obviously tell me about DSCR, and then what else are my options? Yeah. And I guess this may even bleed into the
I think we're going to go
self-employed versus W-2. So go ahead.
Yeah. So we went through, obviously, the top tier, which is conventional, full documentation, everything.
You get the best rates.
Best rate terms, right? And then obviously we then moved to what's called alternative documentation, where we move down to these different tiers where less and less documentation, more credit risk that's being extended, and that's obviously higher
rates, higher down payment.
Higher rates, right? So the next tier from that is typically we see with self-employed borrowers that they don't document because their tax returns are not reflective of what the health of the business is. Mm-hmm. So a lot of times we'll ask for their business bank statements.
It's a nice way of saying it.
Yeah, I know, right? But there's not enough income on the tax returns. But the business bank statements, we'll look at the last 12 months of it, and we'll look at what deposits are coming in and use that cash flow as income for their business. Mm-hmm. And what we'll do is we'll back out an expense ratio, let's say 15%, or it could be more if their overhead is higher based off of the business. But typically you'll see anywhere between 15-25% that will be basically reduced from the monthly deposits that are coming in, as long as they're business-related deposits, right?
So basically the revenue.
Yes, the revenue for the business. And this is a very, I would say, the best alternative for self-employed borrowers outside of the tax returns is doing that.
And what is that program called? That's the bank statement loan.
Yeah, that's the bank statement loan. So you have your full documentation. This is an alternative level documentation. We can still see all the money coming in. We're taking the expense ratio out, and we calculate the self-employed income based off of that. So we're still looking at material, obviously financial documents, and then there's other options when you go from that to lower options where you're kind of, not.
Wait, going back to the bank statement before we go to the other options, what are going to be the rates? 1.9, one base, like 1% higher? Like if you're 6-8 conventional, it's going to be 7-8?
Yeah, I mean, it varies because there's a lot more outlets or investors that do these bank statement programs. So the rates are actually pretty competitive.
Maybe
terms
half
of
a
banks.
point?
I mean, yeah, I would say around there. If not, the spread could be even lower.
Oh, so it's
Could
a
be,
nice
yeah.
option to have.
Yeah, it's
especially for self-employed people.
Yeah, absolutely.
Because it's less documentation. I mean, for all the reasons we said already.
Right.
And then what about DSCR? Because I know that's really popular too.
Yep. Debt service coverage ratio is
Only
very
investors
popular.
Though?
It's an investor product.
Right.
So what I mean by that is non-owner occupied. So the intent from day one is that is a commercial use that they're going to be renting it out and getting somebody under a lease agreement.
Right.
Right.
And
So
if the rent covers the monthly payment, it qualifies.
property cash flows, that's the only income verification that there is. So there are times where there are investors, they don't have the option to go business bank statements or they don't. There's sometimes investors don't want to go through the hassle and they just want to, just basically say, I want a DSCR loan.
Because it is a hassle.
Yeah.
It's a lot of documentation.
I don't want to provide my tax returns. I don't want to, I don't
Yeah.
want my bank statements. I don't want you to contact my CPA, anything like
You
that.
got to chase down your accounts.
Exactly.
Yeah.
So it's a streamlined approach where the income verification is a rent survey that is done that's along with the appraisal report with the property value and says this is what the expected monthly market rent is. And as long as, again, like you said, if it's the same and it cash flows, you're good.
Oh, what are the down payments for these? For DSCR and bank statement loans?
So the DSCR program is typically going to be 20% that you're going to need to do that. And the business bank statements, you can find options that are as low as 10% down. Because, again, we're documenting everything. There's a little bit more certainty in terms of less credit risk doing that.
Got it.
Yep.
Any other ones that are even worth mentioning, or the other ones are kind of like,
maybe something that's popular is asset depletion. So
okay, so I never heard of that. So
yeah, so
new to me.
Yeah, asset depletion is just somebody that might have a boatload of assets in a brokerage account. So they might not be working, but if they have $10 million sitting there, we know that they can obviously pay for the mortgage and pay for it cash. So we will run a certain basically calculation to say, hey, what would the monthly cash flow from this basically asset be, and then use that as the monthly income to cover the new monthly payment.
Just using their brokerage account for this example as the collateral.
Exactly. Yep, that's what it is. So it's asset depletion, which is popular as an option. There's no necessarily employment verification involved, but you need to have a significant amount of assets, right, in order to be able to do something like that. So that's an option though too as well.
Okay. That leads me to, I think, the final topic of like loans.
Yeah.
And then we kind of just chat after.
Yeah.
Crypto.
Right.
So you and I obviously did a deal last year with one of my clients that, he's done very well with crypto.
Right.
There is a bill that's either got passed or they're trying to pass, like literally a week ago or 2 weeks ago.
Yeah.
I read it. I kind of understood it, not fully grasp it.
Yeah.
What's changing now in the crypto, getting loans with using crypto as an asset?
So in terms of crypto, there is a certain way that the loan that investors will accept that it needs to be structured. So this is just broadly speaking, obviously in terms of crypto. The reason why crypto and why it has a lot like a stigma is crypto is untraceable.
So when I read that bill that's trying to get passed, I understood it as they're trying to use they want Fannie Mae and Freddie Mac to use crypto as collateral, but crypto is untraceable.
Correct.
So how do I prove to Fannie Mae and Freddie Mac that this is my crypto holdings?
Yeah.
Is it like linked to my Coinbase account, or like what if you have like one of these alternative platforms that's not like a Coinbase? So Coinbase is like, I guess I could prove that it's mine.
Right.
What if you have like one of these other accounts,
Yeah. But the thing is, I'm just devil's advocate. Let's say you do have a Coinbase account. How do we know that what money moves have been gone into your crypto to know that's even your money that's in your cold wallet?
Yeah, exactly.
Right?
100%.
So what we're talking about with Fannie and Freddie and the laws is we always need to source large deposits since the Patriot Act to know that the money that's being made for a home purchase is your own money. Right?
Okay.
And
I see where you're going.
so we need to know that it's not a cash advance, it's not a loan, and it may impact your capacity to pay back the loan if this is some type of agreement that was made. So with crypto, when we see a large deposit coming in, we need to know where that is. There's no way that you can take that crypto and go back to, technically it's the borrowers, it's technically untraceable. So a solution kind of around that is allowing the crypto, let's say a cold wallet, to make a deposit into the bank account that is sufficient for the down payment, everything, and allow for those funds to season. And by that, I mean that allowing a statement cycle to end and a new one to start where that money is in there. There are investors that will allow basically a new statement of just 1 month with all the money in there and basically fund the loan, and all the down payment, closing, cash to close comes from there. So that is kind of like the solution of how most investors that allow the crypto will do it.
So to dumb it down, I have crypto.
Yeah.
And I want to use my crypto to buy property.
Yep.
In order for me to get a loan from someone, from an investor, using my crypto,
Yeah.
I have to withdraw, sell some crypto,
Yes.
put it in US dollars into my account.
Yes.
They see that, hey, okay, that account is his because he just transferred it.
Right.
Maybe once, maybe twice, maybe 3 times.
Right.
The more I do it, probably the more it helps the investor, right? Show like that really is my wallet.
Well, the thing is, all those deposits are going in your statement, right? But then that statement cycle ends, and then a new statement cycle will start. So when the new statement comes available in 30 days, there are no large deposits.
So maybe if I'm a crypto potential buyer,
Yeah.
it's worth doing this like once a month. Maybe, I don't know, I'm just
Yeah.
talking ideas here. Let's say I want to buy, today we're first week of July. Let's say I want to buy in November,
Yeah.
or just throwing it out there. Maybe once a month I'm bringing deposits from my crypto
Yeah.
to USD
Yeah.
once a month. So it's like it's showing to whoever that is my wallet. And then these bank statements will show proof every 30 days. I don't know. I'm just trying to get creative here.
Yeah. But the thing is, what we would require is when you come time to go purchase, we would typically look at the most recent 2 months bank statements.
So it doesn't matter.
So you would see these deposits coming in. So where I'm saying is there are investors that will allow just the most recent 30-day bank statements. So before any of the activity that happened before, let's say you have to come up with, let's say, $1 million, right? This statement at the beginning statement cycle of when it starts, let's just say, June 1st, for example, has already $1 million in there, and there's no deposits that are coming in. And we can see you have the cash available in your statement to basically go to closing.
And that's, just to clarify,
Yeah.
if I want to use crypto
Yes.
as a loan. Obviously, if the seller accepts crypto, that's a whole nother topic. That's easy.
Right. Correct.
But okay, I mean, it's a little bit more complicated.
Yeah.
We did it. You did it.
Right.
I was there watching. But
Right.
you did it.
Yeah. Thanks for your patience with that. That we got it.
It was
across-
a little
we got
bit
it across-
hard.
We got
Yeah.
it across the finish
We got
line.
it done.
We got done.
And everyone's happy there.
Yeah.
But okay, I mean, I guess to wrap it up, let's talk about just the current market. Like what rates right now are, I think, 6.75. I know because I just saw your email like an hour ago.
Yeah.
That's like the average rate. What do we think happens the next 6 months of 2025 and into 2026? We don't know, obviously. But let's just talk what we think, what we feel, what we're seeing, what we're hearing.
Yeah. I think that there's a general consensus that there will be some rate drops later this year.
Yeah.
And I think that when the Federal Reserve all but said they would have dropped rates already by now if the tariffs were not in place.
Correct.
Right.
That pushed everything back.
Yeah, that pushed everything back. So if later this year they give some reassurance that they're going to cut rates, what you will see happening is you'll see the 30-year fixed mortgages start to drop ahead of that Fed fund rate because the market, remember the Fed fund rate is the overnight rate every night that the banks lend each other money.
Yeah, just because they're going to cut rates doesn't mean when they cut rate that the mortgage rates are going to go down.
Correct. Yeah. That's mortgage rates are based more on the 10-year Treasury,
Right.
which is the 10-year average of the overnight Fed fund rate.
Right.
So if they get some reassurance, the market, that this rate cut is happening, yes, you will see rates from 6.75 start to move lower down.
And the 10-year Treasury. Obviously, there's always a gap between the 10-year Treasury to what mortgage rates are.
Right.
Historically, I think it's 1.7, 1.8%.
Yep, that's really good. Yeah, it's good you know that. I like that.
Education, baby.
Yeah, that's good.
Over the whole COVID years,
Yeah.
or not COVID years, rate hiking inflation years, the average has been 3%,
Yep.
2.8, 2.9, 3.
Yep.
So why we have these really high rates?
Yep. That's why inflation's the devil.
Yes.
That's why.
Now, what is it now? 2.4, something like that?
Yeah, the 10-year
2.5?
Treasury. Yeah, I mean,
Not the 10-year Treasury, the gap.
The
between
gap?
the 10-year Treasury and the mortgage rates. It's got to be like 2 and change.
Yeah, about 2. I mean, it's about 2.5 like right now.
Exactly.
250 basis points. Yeah.
So in a best case scenario,
yeah.
we get rates to the Fed to cut rates.
Yeah.
So then real rates are going down.
Right.
And then we get the gap between the 10-year Treasury and the mortgage rates to go back to historical averages. Let's just say 2%, not even 1.7, 1.8.
Sure.
So now we're talking maybe a half a point here, maybe a half a point there.
Yeah.
Now we maybe, in a best case scenario, we're talking 5 point something rates.
Yeah. Absolutely.
Is it possible? I don't know. I hope.
I mean,
I think a lot of people hope.
Let's hope. But I think that it will get there.
It will get there. It's not a matter of if, it's a matter of when.
Yeah, exactly.
Is it going to be in 6 months or is it going to be in 18 months?
Right. Well, I think it's going to happen by the end of this year. So, I mean, we're
5% rates, mortgage rates?
5% rates?
Yeah.
Oh, I mean, that'll be
not
next
5
year.
flat.
Yeah,
like
yeah.
let's say in the 5s, 5.8, 5.7.
Yeah. No, but hey, I'm really impressed that you knew the spread of that 1.175.
I'm just not a real estate guy, man.
Yeah. Maybe, I should be concerned about my job that you might be originating loans here pretty soon though too.
But
Man of all hats.
Okay, so prediction, end of year, where do we have rates? Mortgage rates, not interest rates, mortgage rates.
Mortgage rates, I would say anywhere between 6.5, maybe slightly a little bit lower.
Yeah.
6.375 or so.
I think 6.3 will be very healthy.
Yeah.
And obviously, another thing that we should know, we don't want rates to go from 6.75 to where they are now to 5.75 overnight, or to 5.
Yeah.
Because then that creates an issue for the real estate side.
Yeah, absolutely. And
that's what happened, obviously, in
Yeah.
COVID.
Yeah, and you have basically so much pent-up demand right now with the shortage of houses. So once those rates do catch a 5 handle, you're just going to see
Everyone that's on the sidelines there are a lot of people on the sidelines.
Yep.
Rightfully so.
Yep.
Because they want rates to go down. Prices are high, rates are high. They think it's unaffordable. There's also a lot of people who are locked into their 3% rate, 3.5% rate.
Right.
That
The golden handcuffs.
and there's people that they want to sell.
Oh yeah.
And either upgrade.
Yeah, they had a kid. They're like, we need more space.
Exactly. But they can't do it right now because rates are almost 7, so it's double.
Yeah.
There's going to be a certain threshold that it won't be 3.5%,
Yeah.
but it'll be like 6, 5.8, 5.5, that they'll say, okay, I have a 3.5% rate now,
Yeah.
but I'm willing to sell and go and get a 5.5% rate,
Yeah.
or really willing to sell and get a 6% rate.
Yeah. I think that there was a study that said that 5.5 was that number. That was like that people were willing to give up their 4% rates, to willing to go up because they just want that space so much.
Yeah, because there's people that truthfully need to sell, whether they had a second child, a third child,
Yeah.
Whatever the case was, they
Right.
need, now they have their mother that's living with them, whatever the case is.
Yeah.
Maybe business is doing really well.
Right.
They could buy it, fortunately. So, yeah, I mean, look, there's so many factors that play into rates with
Yeah.
inflation and so many macro factors as well.
And another one is that we didn't get to touch on is you probably get this question a ton, which is buyers saying, should I buy now or should I wait
Yeah.
for rates to drop?
Yeah.
But if people wait for rates to drop, so is everybody.
So is everybody else.
So everybody goes in,
Yeah.
and then you get these price escalations, right? So
Yeah.
you have these pricing bidding wars again. So
I
a
think it's very
catch-22.
simple. I think it's very simple. if you know you're going to be in a home for 5, 7, 10 years, you buy it now.
Yeah.
And if you could afford it, of course. If you can't afford it, don't buy it.
Yeah.
If you know you're going to be in a home for a minimum 5 years, 7 years, 10 years, you buy it now.
Yeah.
And you refinance it whenever it is the right time for you.
Yeah.
When the rates come down, because the rates will come down. If you don't know where you're going to be in 2, 3 years, then keep renting.
Yeah.
Then keep renting. So I think it's quite simple for me.
Yeah.
Because even throughout these rate cuts or rate hikes, where people have been on the sidelines and people are scared that the market's going to drop. What's happened rates started going up in May of 2022.
Right.
Every year since then, 2022, 2023, 2024, prices have gone up.
Yeah.
So there's been people on the sidelines for 3 years waiting. I'm going to wait for rates to go down. I'm going to wait for rates to go down.
Yeah.
And now you just wasted 3 years.
Yep.
Waiting.
Yeah.
And the same house that was $1 million that you're eyeing, now is like 1.2 in those 3 years. Maybe more, maybe 1.3.
Right.
It's very simple for me.
Yeah.
It's real estate long term, it appreciates over time. Long term. From year now, 10 years, there could be some dips along the ride.
Sure.
But in year 10, it's going to be up. In year 15, it's going to be up.
Yeah.
So unless if you're very short term, like I need to maybe sell in a year or two, then you're like trying to time the market. No one can time the market.
Yeah.
I don't care how smart you are. No one has ever been able to time the market.
It sounds like you're saying buy the house and marry the rate. And I'm sorry, buy the house, marry the house, date the rate.
Yes.
Is what
we
is
hear
what
this
you're
all
saying.
over social media. I think it's very cheesy.
It is very cheesy.
But it's the truth.
Yeah.
Cheesy tagline, but it's the truth.
Yeah. But if you want to take that a step further, I think we like to talk about investments though too. I think it's more along the lines of it's no different than stock, right? If you buy and hold, right, you're buying it regardless of the volatility of what's going on in the market. You're not going to sell, but you have an option with the house, which you do not have with a stock, which is if the rates come down, that you could obviously refinance and lower, obviously your monthly payment, right? But your goal is if you're buying it and this is going to be a long-term hold for you, it doesn't matter. Like it's going to keep going up, it'll go down, like whatever the case is. If you're in there for 6, 10 years, then what are you waiting for?
Right.
If you find the house that you love, pull the trigger, and you're the guy to help them buy the house.
That's a perfect way to wrap it up. Dennis, thank you, man.
Hey, man, thank you
Appreciate
for having
it.
me. Appreciate it.
Thanks for coming.
Always a pleasure.
Thank you, everyone, for watching. If you have any questions, financial questions, we'll have Dennis's information on the link.
Yep.
If you have any questions for me, we'll have my information there. Feel free to call me, text me, DM me. So as always, thank you for watching. Subscribe, like, and we'll see you next time.